Welcome back, traders. If you're genuinely committed to elevating your game and achieving consistent results, you're in the perfect spot. Today we're unpacking one of the most transformative resources out there, Brett N. Steenbarger's The Psychology of Trading. Sure, everyone talks about candlesticks, moving averages, volume profiles, and risk-reward ratios, but the uncomfortable truth is that your headspace often determines whether those tools make you money or cost you everything. This book zeroes in on the invisible side of the business, how thoughts, feelings, and ingrained habits either propel you forward or quietly sabotage your account. Stick with me through this full breakdown. We'll cover the mental models, emotional traps, practical fixes, real trader stories, and long-term mastery path. Hit like if you're serious about this journey, subscribe so you never miss these deep dives, and turn on notifications. Let's get started. Part 1: Where Real Performance Lives, the Arousal Curve. Right from the opening, Steenbarger flips the script. Trading success isn't primarily about finding the perfect setup, it's about staying in the mental sweet spot where you can actually execute that setup without self-destructing. Picture your performance as an upside-down U. At the peak you're alert yet calm, decisive yet patient, fully present, reading price action clearly, honoring rules effortlessly. Slide too high: amped up excitement after wins, adrenaline overload during news events, and impulsivity rules, oversized positions, skipping stops, revenge entries. Drop too low: apathy, exhaustion, creeping doubt, paralyzing fear, and opportunities vanish because you hesitate, second guess, or simply freeze. The market constantly pushes you off that peak. A string of winners breeds cockiness, a string of losers breeds panic. The skill isn't eliminating emotion, it's noticing when you're drifting and gently steering back toward balance. Top performers develop an internal radar for "I'm starting to tilt" signals, faster breathing, tunnel vision, urge to force a trade. Quick real-world example Steenbarger highlights. A skilled analyst kept blowing up after small drawdowns because frustration triggered, must win it back now, mode. By logging emotional state alongside every trade, he spotted the pattern early. After 2 consecutive losses his risk appetite spiked irrationally. Awareness alone cut his blow-up frequency dramatically. Takeaway exercise. For the next month, after each session rate your average arousal level: 1 equals numb bored, 10 equals wired frantic. Note where your profitable trades clustered versus losers. You'll quickly see your personal peak zone. Part 2: The emotional landmines traders step on daily. Trading amplifies normal human wiring into high-stakes drama. Stress accumulates from constant uncertainty and the sting of unrealized or realized losses. Under moderate stress focus narrows to immediate survival, great for caveman threats, terrible for multi-hour chart reading. Result: abandoning plans to chase quick fixes. Fear wears many masks: fear of being wrong, hesitation, fear of missing out, FOMO chasing, fear of further pain, premature exits. It's protective in origin, but overactive fear turns potential winners into scratches or small losers. Overconfidence sneaks in after greens. I've figured this out. Thinking enlarges positions, relaxes rules, ignores contrary evidence. One sharp reversal later and months of gains vanish. Frustration after adversity often mutates into revenge trading, the emotional need to punish the market rather than learn from it. Steenbarger's core message: these states aren't character defects, they're signals. Treat them as data. When fear spikes, double-check risk exposure and set up validity. When euphoria arrives, deliberately reduce size and tighten criteria. Awareness plus deliberate counter-action short-circuits the destructive cycle. Part 3: How your personality shapes or limits your edge. There is no single, correct, trading approach, only the one that aligns with your temperament. Adventurous, high-energy personalities often gravitate toward intraday volatility and quick decisions but burn out on longer holds. Methodical, low-drama types shine in swing or position frameworks where patience and deep analysis pay off but crumble under rapid-fire pressure. Emotional bounce-back capacity matters enormously. Some shrug off a -3% day and re-engage next morning, others enter multi-week doubt spirals. Decision style counts too: data-driven analysts versus pattern-intuitive feel players. Steenbarger urges brutal honesty. Review your trade history. Where did you make the most consistent money with the least psychological pain? Which styles repeatedly produced stress or mistakes despite decent technical reads? Double down on the former, either modify or abandon the latter. Example shift. An ultra-analytical trader forced himself into scalping because that's where the volume is. Constant anxiety and subpar results followed. Switching to multi-day trend plays using his research strength produced smoother equity curve and far less daily drama. Part 4 Sharpening focus and clearing mental noise. Elite execution requires mental clarity under fire. Build routines that protect it. Pre-open checklist. Review core plan, key levels, news calendar, 2-minute centering breath work. During session resets. When tension rises, stand, stretch, breathe box pattern 4-4-4-4 return only when calm returns. Post-close ritual. Technical review plus emotional autopsy, what feeling drove that early exit? Visualization drills prime success. Nightly spend 3 to 5 minutes vividly seeing disciplined entries exits, calm stop management, walking away after rule violation. Cognitive traps need active countermeasures. Confirmation bias right-pointing arrow force devil's advocate arguments before every trade. Recency effect right-pointing arrow always cross-reference higher timeframes and historical analogs. Loss aversion right-pointing arrow pre-commit to mechanical exits, treat stops as insurance premiums, not personal defeats. Part 5 Turning knowledge into habit, behavioral foundations. Consistency beats talent long-term. Craft ironclad daily sequences. Morning. Plan review, market context, intention setting, mental rehearsal. Trading window. Strict hours, no multitasking, enforced breaks after X consecutive decisions. Evening. Full debrief, technical, positional, emotional. Log patterns. Visualization isn't woo-woo. Athletes and fighter pilots use it because it strengthens neural pathways for desired behavior. Rehearse adversity responses gap against you. News spike through stop, so real events feel familiar rather than shocking. Start tiny. Add 1 60-second breathing anchor before entries. Stack habits gradually. Within weeks autopilot discipline replaces white-knuckle willpower. Part 6 Mastering the emotional roller coaster. Drawdowns test character more than winning streaks. Stress management toolkit. Identify personal triggers, certain pairs, session times, P&L thresholds. Instant physiological interrupt. Physiological sigh, double inhale plus long exhale, cold water splash, quick walk. Reframe losses. Tuition payment for data. Extract one concrete lesson per red trade. Anxiety antidote. Shift attention to controllables, process adherence, sizing discipline, journal completeness, not outcome dollars. Frustration diffuser. Mandatory timeout rule after emotional heat. Channel energy into deliberate practice, backtest, review footage rather than impulsive re-entry. Resilience builder. Practice self-kindness after mistakes. Growth language I'm training to become, vs. I'm terrible at. Surround yourself with supportive voices, mentor, peer group, coach. Part 7 The psychological trading plan. A plan without psychology is half a plan. Core mechanical rules everyone knows. Setups, entries, stops, targets, are minimums. Add emotional guardrails. Max daily emotional units e.g., after 2 rule breaks right pointing arrow session over. Tilt indicators and automatic circuit breakers, heart rate monitor, P&L pause thresholds. Pre-visualization of sticking to plan during adversity. Weekly audit. Adherence percent, emotional leakage patterns, rule violation triggers. Tweak without abandoning framework. Accountability layer. Share weekly stats with partner, mentor community. Public commitment raises follow-through odds. Part 8 Self-coaching. Becoming your own best mentor. Waiting for external saviors delays progress. Elite traders run continuous internal performance reviews. Core loop. Honest self-inquiry. Am I trading my edge or my mood? Detailed journaling. Thoughts plus feelings plus context plus outcome. Micro goals. 0 impulse entries this week, 100% stop usage. Weekly deep dive. Pattern recognition, strength reinforcement, weakness targeting. Emotional regulation routine embedded daily. Strengths inventory matters as much as weakness hunting. Leverage what comes naturally, shore up vulnerabilities systematically. Part 9 Real trader stories, lessons from the trenches. Steenbarger shares anonymized cases that hit home. Impulsive fear trader. Panic sold winners, chased reversals. Solution. Rigid mechanical stops plus emotion logging right pointing arrow pattern awareness right pointing arrow calmer execution. Euphoria victim. Tripled size after hot streak, ignored warnings. Lesson. Mandatory humility review after X consecutive wins. Despair cycle after drawdown. Questioned entire career. Turnaround. Mentor guided reframing plus small win focus right pointing arrow rebuilt confidence brick by brick. Chronic anxiety over trader. Paralyzed by perfectionism. Breakthrough. Mindfulness practice plus acceptance of probabilistic nature. Right pointing arrow. Decisive action returned. Common thread. Self-defeating patterns are fixable through awareness, structured intervention, persistence. Part 10. Intuition. Earned, not magical. Gut feel isn't mysticism, it's rapid subconscious pattern matching built from screen time. Develop it deliberately. Log intuitive reads versus actual results. Distinguish calm knowing from emotional urgency. Reflect. When has instinct been reliable? When was it fear, greed in disguise? Support with conscious analysis. Intuition proposes, rules dispose. Trust grows slowly, earned through evidence, not blind leap. Part 11. The mental side of risk control. Risk feels existential because money symbolizes safety, status, freedom. Emotions distort. Fear. Right pointing arrow. Undersizing. Valid setups are moving stops farther. Greed. Right pointing arrow. Oversizing after wins, widening stops, because it'll come back. Defenses. Pre-trade risk. Math locked in, no renegotiation mid-trade. Automation. Hard stops, position size calculators. Losses reframed as inevitable business expense. Sleep at night. Sizing trumps theoretical max risk. Final section. The long road to mastery. Mastery isn't a finish line, it's daily alignment of thought, emotion, and action. Integrate everything. Morning emotional, mental check-in. Process first. Goals over dollar targets. Relentless reflection without self-flagellation. Consistency through routine, not motivation. Resilience via reframing plus support network. The market reveals who you are. Change yourself deliberately, and results follow naturally. That's the complete mental blueprint. Apply one piece this week. Journal emotions, add pre-trade breathing, set a hard daily loss cap. Small consistent actions compound into transformation. Drop a comment. Which concept hit hardest? What will you implement first? Share this with a trader friend who needs the reminder. Keep studying yourself as hard as you study charts. Until next time, trade with discipline, stay aware, and protect your capital. See you soon.